Hey everybody, it's Pete. Welcome to Stocks for Breakfast. Thank you so much for joining me here today. Just want to remind everybody it's a short week this week in observance of Good Friday. So if you have any swing trades heading into Thursday, you need to know that that's going to happen. And there's actually a lot of economic data that's coming out, and that economic data coming out on Friday. So we're actually going to map out the entire week as far as the best opportunities for the week, what's going on with sector rotation, and I think even more importantly, why the stock market is giving us clues, giving us clues about what should be happening under the hood right now, because there's a big thing going on with price action and volume. And it's actually something that we do what we call tape reading. And that's a very important thing to understand. Hey, LJ, good morning. Always great to see you, pal. Thanks so much for being here. Pamela Hicks, how are you? Good morning. Good morning. So if you happen to be watching this on a replay a little bit later in the day or a little bit later in the week, we're going to be mapping out what the week finished as last week, which was a pretty healthy pause in the overall market. So if we kind of dive a little bit deeper into what the S&P 500 did last week, this uptrend is still pretty much intact. There's really nothing in the way to be slowing this thing down right now. Or is there? That's actually a big thing we want to talk about, because there's two very important things that every trader should know. Anybody who's got any kind of money in the market, doesn't matter how long you're holding it, you want to get clues. And there's something that you want to write down. Again, if you're a big follower of the channel, which obviously we appreciate, you need to have post-it pads. Post-it pads posted all over your monitors with clues, right? So the big thing that we want to pay attention to is, what are the odds of follow-through? So in other words, when we push and we pause, are we getting clues for the next move in the market? So one of the most important things in the stock market, when stocks push, you want to see them push on heavy volume. That means that there's good buying, or in this case, buying pressure to the upside. And then when stocks pause, we know them as bull flags or pennants or wedges or whatever technical analysis chart pattern you happen to like. We like to keep it super simple. You get push and then you pause without giving all the labels to everything, right? It's during that pause that we get clues to the next move in the market. Now, here's the thing that you want to write down, and you might know this already, but that's fine. It's always good to review the basics of what we do in the market. A light volume pause implies continuation. So in other words, somebody with deep pockets were pushing that thing up, and then they kind of take a break. They look to see if there's any other buyers joining them. They want to get a little better price on it. They don't want to push it up on themselves. So a light volume pause is good for the continuation of whatever stock you're looking at. A heavy volume pause implies something is changing. Now, there's two different kinds of heavy pauses that we want to look at. You get a push and a pause on heavy volume. That implies that there is some kind of changing of the opinion of that market. So what we're talking about right now, I'll just show you like this book that I have out. Oops, sorry about that. My dad just said good morning. Good morning, everybody. I want to point out something here that you can actually get on our website, which is this book right here, which is tape reading. Now, this book actually is 43 pages, and we spend a massive amount of time in this book discussing what happens with price action and what do we anticipate happening next. Now, one of the most important things to realize is the separation between being an investor in the stock market and being a trader in the stock market. Most people associate investing with value investing, where you're trying to buy an undervalued stock and you want the market to change its opinion on that stock, right? Trading is a little bit different. Traders don't want what's happening to change. They want what's happening to continue. So again, you want to write that down. Post-it pads are everything, right? So post-it pad on investing, which is we want things to change. And then you look for clues to change, whether it's intrinsic value, Benjamin Graham talking about Mr. Market, mispricing it and putting it back to where it belongs eventually, right? But here's the thing that separates trading. And I think, honestly, I think this is the most important and most exciting thing about trading. Raise your hand if you ever looked at the market and you say, where do I think this is going to be a month from now, right? Everybody who comes into the market has that kind of picture where, like, I need to predict what's going to happen next in order to make money. Wrong. That is completely wrong. I thought that the same thing when I first started trading. You kind of look to put a trade on, you kind of hesitate because you're like, all right, if I put this thing on, what if this particular trade doesn't follow through, right? I think all of us have done that. I see Shay here. Good morning. Good morning, Shay. Always a pleasure to see you here. Thanks for being here with us. Let's see, Rose and Shay, two beautiful names. I like that. And Tom, hey, Tom Foolery, I like that. Actually, Tom's a member of our community. Good morning, Tom. So here's the thing I want to talk about. When you are looking at the market from a trading perspective, and I'm very deliberate with separating trading from investing, our job when we are tape reading, our job when we are looking at price action, our job when we're looking at price action and volume, putting those things together, we don't need to predict in order to make money from the stock market. To make the stock market make money for us, we need to have a framework that says, is it still valid? So in other words, not where is it going to be, but is it still valid now? And that's kind of where we get into some of the basics of tape reading, which is price action with volume, as I just pointed out. So as I mentioned, there's two kinds of pauses: a shorter term pause with light volume and a shorter term pause with heavier volume. That's one clue. But now we have a longer term one. And the two that we're going to talk about now is known as accumulation or distribution. Now, accumulation, you can see when a stock starts to go down and goes sideways on heavy volume, that is a churning of pushing down their selling pressure. Heavy volume sideways means now somebody's stepping up and saying, I like it at this price. So you tend to see the stock channel, but on heavier volume, and that tends to lead to a move up in the other direction. What's interesting on the other side is you start to have these moves to the upside, and then as it's going up and then eventually goes sideways, as long as it's going sideways on light volume, we're good. We can say to ourselves, it's still valid, nothing has changed. But, and this is really where it's going to get exciting, because we're going to take a look at the chart of the S&P 500. When you start to go up, and especially sideways on heavier volume, that means what we want to see is not unfolding. Now, again, this is another thing you want to write down. Hopefully you have a trading journal, right? You want to write down, when you know what you're looking for, you're never lost. So this is the separation where average people kind of can make trading so much easier by saying, I don't need to predict what's going to happen next. I only need to know what I'm looking for. So if I'm looking at the stock market and I say, okay, I know exactly what I'm looking for, is it there? That's all I need to say. If it's hard to find, it's not there. That means something changed or not to do something. But is what I'm looking for there? Now, we could take a look at this chart and we could say the S&P is absolutely still going up, right? That looks amazing. But let's go back to what we just talked about before with the way that the market is supposed to go up, and especially during, you can see this kind of like 3-week trading range over here, right? Even though it was going up, it was still kind of stuck in a box, right? Now I'm going to drop something in here that I'm just going to drop volume in there. So we're going to drop volume in. And on the bottom part here, this horizontal line is the average volume over the last 30 days for the SPY ETF, which is a proxy for the S&P 500 here, as you can see. Now, something that should stick out to you in a really big, almost obnoxious way is that look at how many times the volume in the S&P 500 spiked higher on down days, and how infrequently volume spiked higher on up days, and especially this little pocket of opportunity over here, which is really interesting. 3 days in a row of much heavier volume on selling days, and you can even see we had one over here, we had a big one over here, right? And we had a big one on Friday. Now, what's even more interesting is what should happen when we go higher. We just hit all-time highs in the S&P 500. The stock market made all-time highs. What should happen when we make new all-time highs? What should happen when we're rallying? Well, we should have increased volume, and we didn't. This is a chart. Again, please print this chart out. It's really, really important. So I like to keep things super easy to make a decision. I don't want to say simple because that's being disrespectful to everybody. We want to make sure that when we look at the market, we know exactly what we're looking for, and we have an answer to, is it there? Is what I'm looking for there? If the answer comes back yes, we dig in and we start to place trades because what we're looking for is happening. Then it's just a question at that point of having a framework of determining, is it valid or has it changed? Now, that's a lot of talk, right? What does that mean? It basically means you need to understand how to measure and track order flow. Order flow is basically when institutions, large players in the market who have deep pockets, teams of research, those kinds of things, hedge funds, banks, whatever it happens to be, they allocate money to the market. doesn't matter who it is. Don't get so hung up on who's doing it. It's somebody with a lot of money. That's all we care about. So if we need to know what we're looking for when somebody with deep pockets is buying or dumping stock, that's known as a markup or a markdown. Now that happens over days, weeks, and months. You just don't go out there. Let's say compare between. Let's use compare between as an example. Let's say that compare between needs to buy 10 million shares of AMD, for example. Not just going to go out there and buy 10 million shares today. You're going to go out there and buy 10 million shares over days, over weeks. And there's also something that's super important. So I'm actually going to pull up AMD as an example. And this might be an advanced lesson for some of you, but it's a pretty important one. If we go into the intraday charts of AMD, and we're not talking about day trading here, we're just looking at something interesting, which is called VWAP. So VWAP is something called volume weighted average price. And this is super awesome that this happened right here and what we got here in separation. So when institutions are looking to buy millions and millions of shares, it is more important for institutions to get the entire position on over time because they're playing for a much bigger move. They're not exactly looking for the exact penny on a trade like we might be doing, because that penny matters when we're looking to place our swing trades to get in and out over whatever time frame that happens to be. But when institutions send their orders down to their brokers or they're trying to fill the orders themselves, what they are looking to do is they are looking to get as many shares as possible around VWAP. So if a million shares get executed by them on a particular day, they want as many of those shares to be the nearest of the average price of where the most shares traded that day. So that's actually what VWAP means. So volume being the key word there, volume weighted average price. So they are sending orders down over days and weeks and sometimes even months. And that's kind of what we call stacked order flow. So when institutions are buying stocks over periods of time, they are doing it slowly. They're trying to get it at that VWAP number. So again, you probably want to take a chart of this because AMD actually had a pretty awesome inflection point here where the average right there stopped it on the pullback and we got this big move during the day. So what does all that have to do with the market right now, right? Well, what we're seeing in the market right now is some really good economic data that's come out over the last couple of months where employment has been pretty good. Inflation, not quite coming down where the Fed wants it to be, but it's not really raised anymore. But this week is important, okay? First, we're going to take a look at sector rotation, and then we're going to take a look at this week. Now, I want to, again, everything we talk about here is for educational purposes, right? It's for you to make the best decision, but I need to remind you, the market is closed on Friday. If you happen to be international and you're not here and you're catching up on the news every day, this Friday is Good Friday in the United States, so the stock market is closed. But now here's the big thing. We have big economic data coming out this week. So with the strong rotation of some, what my people call market breadth, plus economic data, plus what we're seeing, what is called distribution on the tape, which is what I just showed you, there's a lot going on this week, right? Now, my goal is not to confuse you with all that stuff. Here's my point. My point is there's a lot of headwinds going on this week. There's economic data, which we're going to take a look at in a second. The S&P 500 is showing signs of distribution, which are heavy volume down days, and market breadth is improving. So there's like a whole bunch of different things going on this week. Here's the thing I want to talk about. If you could imagine that there's a tug of war going on, right? If everybody's on one side, it's pretty easy to see it go in that direction, right? Which is how the market's been recently. But if all of a sudden now we have competing headlines for what's going on in the market, it's not going to go up with the same fervor, the same excitement, the same push, right? That's what's going on this week. So essentially what I'm walking you through right now is how do you set expectations for the week for potential profits? That's really what we're talking about. Now, all the stuff that I talked about, it wasn't to make me sound smart. It wasn't to confuse you. It was just to let you know that there's a lot going on this week. So for me personally this week, with all of these different things that are going on, I am lowering my exposure this week, meaning I'm lowering the amount that I'm allocating to new ideas. I am lowering my profit targets on those, which means that I'll be more inclined to be taking quicker profits when things slow down, because of the amount of stuff that's going on this week. So I just want to give you a visual, one that LJ has probably heard me talk about 100 times already in the community, which is driving a car. So if we can get on the highway, I grew up on Long Island, we go down the 495, we get on Long Island Expressway, and nobody's on the road, you can step on the gas and you'll have conviction, right? If there's nothing in the way and everything looks rosy, you can step on and you can have confidence that you'll be okay, right? But if that same road the next day has, a rubbernecking delay, maybe it's raining, whatever, and you're kind of in stop and go traffic, it's not the same condition. We have to lower our expectation for our conviction. So in other words, we're probably going to go break gas throughout that entire trip, right? Well, that's what we're talking about in the market right now. So if we can kind of dive into the way that the market metrics are unfolding here, you can actually see that the advanced decline line went big negative on Friday. So big change in the metrics, right? If we start to work our way over into some of the other parts of the market, and specifically the ones that have been carrying the market, which has been technology, the last 2 weeks or so, technology has gotten a little bit less bullish. So again, what am I looking for? I'm looking for this. And we haven't had that. Look at technology. It's kind of like all over the place, right? Then we kind of work our way over into other clues in the market. Energy and consumer defensive are rallying, as well as basic materials. So we're kind of shifting away from technology being the top trades into other areas of the market. So now we're rotating and following where the market's going. Now, I just want to come back and just really, I want to say this in a way that hopefully gets you excited about trading the market. Our job is not to predict. When we do the kind of work that I'm showing you here right now, which obviously I do for our community, it's pretty easy to see where the money is rotating, where the money is shifting out of, where the money has been consistent. When we spend our time recognizing and shadowing what the institutions are doing, as opposed to predicting what they're going to do next, it's a heck of a lot easier to be involved in the stock market. And it takes all of that pressure off of whether or not we can predict what's going to happen next. Great trading does not involve predicting. Great trading is having a process for saying, is it still valid? And how do I know when it changes? So if you happen to be an active trader managing your trading account, which you probably are, right? You're here with me at 7:30 in the morning on a Monday, and thank you for that. I really appreciate it. You just need to know that it's probably a lot simpler than what you need it to be. Now, one of the shocking things that we walk a lot of people through in the community is that reading the charts and trading are two completely different things. And that's a really big challenge for people because they want to learn there's 1,000-page books on chart patterns and moving averages and all those kinds of things. That is not trading. That is finding ideas that you might like to place money on. But then what happens after that is the actual process of trading. And a part of the process of trading is how much money do we want to put into the idea. So there's all of the information before the trade, and then there's the actual trading part of it. Never forget that those two things are different. So if you're not getting the results that you want right now, you might be thinking that trading and chart reading is the same thing. It's not. But there's even more, because after we put the trade on, now we have new decisions after the market unfolds while we're in the position. So now we have new decisions of whether or not we should be adding to that position. Should we be holding on? What kind of profit should we be going after? And again, same thing as driving. Sometimes it's open road, slows down, then you open up again. It's no different. You got on the road and now you got to pay attention to conditions. So what I would encourage you to do is to start to track from 1 week to the next. You don't got to do it every day unless you want to, of course, right? Track every day and say, is it obvious? So when we get an answer to whether or not is it obvious, just kind of in your mind, put a grade on it and say on a scale of 1 to 10, is it obvious right now? Because in the simplest way, that's going to up level or decrease the amount of money you want to put into the idea just simply because it's obvious or it's not. Now, I want to give you a really easy way of doing that. So if we head on over to Finviz, which is a software that a lot of people use, and we kind of mapped out here the S&P 500 over the last 5 days. Can you look at this right now and say, is it obvious? So obviously the size of the box is the size of the market cap of the company. So it's a larger company, right? So obviously you can see Apple is the biggest one on the board, Microsoft, NVIDIA now with artificial intelligence, and even Amazon, right? So you want to take a quick look. And what we're talking about right now is separating trading from chart reading. You need to be able to take a look at it really quick and say, is it obvious? And what does that mean for the amount of money I should be willing to risk? So if we look at this right now, it was a pretty good week last week, right? Obviously, we made all-time highs, but there are clues that we want to be looking at. Some of the semiconductor stocks that have been really strong are starting to show a little bit of weakness. So we need to pay attention to that, because we have to say to ourselves from one week to the next, what was the reason the stock market went up? Just super high level. You don't got to dive into financial reports unless you want to. And most of it has been from artificial intelligence. Most of it has been from the stock NVIDIA, which has been a very, very strong stock. Matter of fact, there's NVIDIA has gained over $1 trillion in market cap this year. That's how strong the stock has been. It's just been absolutely amazing. All right. So we want to kind of work our way into what that means for trading this week. So we started out by saying, looking at the S&P 500, I would say 8 even, right? And maybe put an 8 on that. Mostly green on the board, right? Not exactly a lot of selling. You compare that to what it looked like on Friday, which is a much, much different picture, right? Obviously, it pulled back a little bit, a much different picture. But now we kind of want to work our way over into what else is happening for the week. And we need to hop over here into the economic calendar, and especially the calendar for the week. Now, this is really important. And this is what professional traders do. They kind of lay out the map for what's going on for the coming week to assess what kind of risk is the right risk. Now, I want to just say that again. And again, write it down on a Post-it pad. Have your coffee in the morning on Sunday. This is not going to take a lot of time out of your calendar. You just, again, small coffee. Say, I'm going to put 10 minutes into seeing what's going on in the market this week and what's important. So write that down, right? So this week, we have very important economic data that the FOMC, the Fed, and Jerome Powell are going to take a look at, and it has to do with the economy, and it has to do with inflation. So we're going to take a look at that. Now, here's the big thing, and I want to keep saying this because it's that important. The markets closed on Friday, but important economic data is still getting reported on Friday. So if you happen to have swing trades or positions that are kind of like right on the bubble of profitability, you might want to make a decision, or at least think about it. Do I want to hold this position into a day the stock market is closed with big economic data coming out? Again, these are the kind of things that professional traders do every week when they have their meetings every day, but especially Monday heading into the week. How does the market look for news? Is there a lot of big news coming out? If the answer is no, well, then you can kind of get in there with a little bit more conviction, because there's kind of like no black clouds on the horizon. This week, there is important economic data coming out, or important news coming out, especially here on Thursday and Friday. The GDP report is the kind of like the pulse of the overall economy. So basically, the last couple of GDP reports were actually pretty good, which indicated that the economy was strong and chugging. And that's why the Fed, one of the reasons why the Fed has not cut interest rates as was expected coming into this year, because if the economy is strong, or getting stronger, stronger than expected, and employment stronger than expected, well, that means that the economy is running a little bit hot, and then there's a fear of inflation rising. So the one way that the Fed can monitor that is by keeping interest rates a little bit higher, so that it doesn't get out of control, so that the cost of eggs doesn't become ridiculous, right? So the GDP number on Thursday before the market opens, gross domestic product, is very, very important for us to pay attention to, because that's going to be clues for the Federal Reserve to help determine whether or not they're going to raise interest rates. Now, last week, they gave some clues that they are going to do it this year, and they're getting a little bit more clarity, which is why the market rallied, okay? But now we have new information. So remember, we talked about there's all the information before the trade, and new information comes out after. So you need to know GDP reports coming out on Thursday, and PCE. Now, PCE affects us, because a big part of the market rallying, other than artificial intelligence, is us, the consumer, has still been spending money. Now, the fact that the economy has been good, GDP report, and the inflation numbers are kind of okay, but employment is still strong. The consumer, us, has been pretty okay with still spending money. So consumer sentiment is also coming out this week. There's going to be report on on how we feel about the market, right? So you got to ask yourself, how far has your dollar been going, right? So core PCE, which is personal consumption expenditures. So that basically means personal as opposed to producer price index, is how do we feel about it? Now, when the Fed is going to get a reading on how prices that we've been paying are rising, declining, or kind of staying the same. So it's kind of like all these things. If you could imagine like your personal credit card, the Fed is basically adjusting the interest rates the country is paying based on prices, right? So these are some big things that are happening this week. So when you factor in, this is kind of really want to bring the whole thing together. When you factor in that we're seeing distribution in the S&P 500, where there's heavier volume days on the downside, when we rally to hit new all-time highs on lighter volume, which is not, it should have been heavier volume on the way up, and all of these economic data coming out this week, this is a week where I'm personally going to be a little bit more conservative with my risk. So going into this week, I've already established what kind of trades I want to take from a risk perspective. Now, there are a couple of other opportunities. Remember, we said before that the market is kind of shifting where technology was the number one thing, and especially semiconductor stocks, into some other pockets of opportunity. So that's more research that you can do over coffee, right? But if we kind of break that down a little bit more and we hop on over into sector rotation, you can actually see here over the last 4 weeks, it's been kind of spotty, but communication services has been strong. So we could look at stocks like Netflix and those kinds of things. Spotify has actually been pretty strong recently as well. So if we take a look at those guys, we can pull those up on a chart. So communication services, we have Netflix, which is having a pretty solid run recently. We also have Spotify, also looking to break out recently. So there's a few stocks in that area that are looking pretty good right now. So we're kind of shifting over for where a lot of these tech stocks have maybe reached a point where they're priced right, and the market is kind of shifting into other ideas. If we go into some other ideas, such as basic materials, which has been pretty strong across the board, you can actually see it here. We can take a look at something a little bit less expensive, such as Alcoa. Alcoa actually has been rallying recently as well. You can see it finally broke this move to the downside. And again, kind of visualizing it, right? We had a push and a pause. We had a push and a pause and a push, and now we're pausing again, looking for the next move in Alcoa to the upside. So as you're mapping out what you're looking in the market, we're starting to kind of work our way into where are some of the ideas that we could be looking at this week, right? So obviously, we just looked at communication services. Consumer cyclical actually has some buying pressure as well. Industrials, by the way, if you haven't been watching General Electric for the last year or so, my gosh, look at this trend. Just absolutely amazing, right? So the point that I want to get across here right now is that the market is a little bit less obvious with even though we made all-time highs last week, we need to see that picture change where we need to see heavier volume going up, not lighter volume going up, right? So that's one thing. We need to know that these economic reports are coming out this week, which, again, I just explained to you how that's going to affect my position size this week. And now we're giving you a little bit of a different picture of some of the other ideas in the market where money's kind of shifting from one group into another. Now, if you want the exact language on that, there's two ways of describing it. Number one is the strength in artificial intelligence has been absolutely amazing, especially for semiconductor stocks. Now, Micron has been one of those stocks that's been coming out. You might be thinking, I want to trade Micron because earnings were good last week. We got a big rally. But again, this is that extra 10 minutes with a cup of coffee on Sunday. Micron also has some news this week that we need to pay attention to, as well as AMD and Intel. And that is news with China and exports. So you got to be aware of that. So when Micron reported last week and the numbers were pretty darn good, you can see that we're actually pulling back a little bit with some profit taking and pulling back a little bit with some news. So what we'd be doing here in Micron with all this stuff that's going on is I have an alert set for 113, and I'm not going to do anything until it gets back up to that price from where it gapped after earnings. So if you want to take a snapshot of this, this is actually a pretty important picture because these are where the pockets of opportunity were last week. It did include technology, but there's some other opportunities in here that we could take advantage of as well, okay? So what my goal was for this week And especially, I love to do this on Monday because I kind of like to give you a behind the scenes of what I'm looking at and how I'm thinking for the coming week. The passion with which the buying opportunities have been going on for the last 22 weeks now, which is just absolutely amazing. I hope you've really been enjoying this ride. There's a different picture going on right now into the market. And I'm just going to pull up the S&P 500, the SPY again, just to repeat what I showed you before, because this is really important. So when we start to look at it going up, we need to pay attention to what's going on. So what's kind of really nice here is you can see during this pause, volume dropped down. During the rally, volume increased. Up till that moment, that was pretty good. That was exactly what we wanted to see. But now the last 3 weeks or so, that story has changed a little bit, and we're starting to see heavier volume down days. And the language behind that is known as distribution. Now, here's the thing. Distribution does not mean just hit that thing and get out of there and get out of the trade and sell and run the other way. That's not what it means. What it means is something is changing. So remember, our job is to say, is it still valid? What we're talking about now, when that super simple way of looking at volume and knowing what we're looking for, is things under the hood have changed, but price has not started to break the trend. So again, I want to give you a visual of what that would look like, and you need to just draw some simple trend lines, and you can actually see this would not even come close to being a change of trend until price got down, way down here in the S&P, which is still another $3 and change lower than that. And that's only where it would be a potential change of trend. Now, it would be a much more aggressive opinion of a change of trend if we start to head down and break that level and we do it on heavier volume. If we go down and we do it on lighter volume, that's actually constructive. So basically what that means, the price action over the next week or so, we already just mapped it out. We're looking at what kind of price action we get and what does volume look like in that next move. If we go down on heavy volume, something is changing. If we go down on lighter volume, we're still good and the market's just taking a pause. Now, if all of what I just said to you is new, I would really strongly suggest that you watch this video one more time, pause it and take notes, because I didn't cover anything that's really that complicated. What I did is just walk you through some of the things to consider to determine how much money you want to take out of your pocket. That's really the entire point that I wanted to map out this week. For the last 22 weeks, everything has been like, wow, this is amazing. Let's find spots to buy. Things are kind of changing a little bit and shifting, maybe even just shifting from technology into some other things, because a lot of people right now are saying technology stocks are properly priced. And that essentially means that the price level that they're at right now, the cash flow matches where they are, and they would have to do something even more amazing to justify even higher prices. And we're kind of seeing that in probably two of the biggest stocks. So we could use SMCI as an example, which has been one of the other ones that has just been amazing. You can see the tone has changed dramatically here. Look at how amazing it was here, and look at how sloppy it's getting now, right? If you took a look at it and said, man, that's exactly what I want to see, we're not seeing that anymore. So that's why this sector rotation is so important, to know where money is flowing outside of just that main picture. So again, just to recap the stock market heading into this week, stock market's closed on Friday. Big economic data coming out on Thursday and Friday. And again, Friday it's coming out, so you got to make decisions on that. And we're seeing a little bit of sector rotation into some of those other pockets of opportunity that I just showed you. And some of these large tech stocks are getting sloppy up here, which means that there's probably a change of opinion by institutions. So we just have to shadow what they're doing. All we need to do is have a process for tracking that. The better our process, the more confidence we have to say, I know what I'm looking for. I don't care what's going to happen next. I just need to know if it's still valid. That's so much easier than trying to predict. So again, if a lot of this stuff is new to you, that's okay. Everybody has a learning curve, right? If what I talked about today is new or introduced you to some different stuff, especially how all of that applies into how much I'm putting into my trades this week and what kind of profits I'm going after, do yourself a favor. Pause the video, watch it again, take notes, and then come back with better questions. Come back to the market and say, do I know what I'm looking for, and is it there? And if you need some help with that, leave a comment below the video, and I promise to get back to you with any questions that you might have, because that's obviously the best place for me to get in touch with you. Leave a comment, whatever question you have about what we talked about today, I'll be more than happy to answer it as well. So remember, changes in the S&P 500 from volume, Big economic data coming out later in the week. The market is closed on Friday, but we still have economic data coming out, and sector rotation is showing a movement from institutions into come up some other pockets of opportunity. So again, watch this video one more time, take notes, and then leave comments below the video. I would love to hear from you. Of course, I appreciate it, right? If we did a good job today, do me a favor, give me a thumbs up, hit that like button, and have an awesome, awesome week of trading. I really appreciate it. Thank you so much.